All right, market psychology and timing. Let's talk about it. How do you know if it's a good time to buy or if it's a good time to sell? Generally speaking, there's a lot of nuance here in terms of your personal situation, preferences, area that you're looking in, what you're looking for, and things of that nature. But there's also some macro trends as it relates to buyers markets and sellers markets. And as the names kind of say, there's a better time to be buying and there's a better time to be selling. But it's not as clear cut as it seems because you're not exactly going to be able to time the bottom or the exact top. It's not like a mariachi band and fireworks go off and they go, all right, that was the highest price to sell at. You missed your chance, or this is the lowest price that you were going to buy at. It's all up from here, right? So a lot of what makes a buyer's market or makes a seller's market are sort of reasons that have more than one factor at play that could be influencing a sort of mania either which way, and it's usually extremes. So if we look at 2021 and you were to turn on the news, basically you were hearing the same thing over and over again, like the same few talking points. Oh, the market's going to keep going up like this for the next 5 years. We have, the mountains on one side, we have the oceans on the other side, and we have the border on one side. So we don't really have any place to build the same, it's like you're hearing that parroted over and over again. And then you had a macro environment where we had almost free money being given out, causing massive levels of inflation, as well as you have insane immigration, contributing to a massive influx all at one time. And then when things are going up, you're hearing these reasons over and over again. Fast forward a couple years later, and all of a sudden, we still have the mountains on one side, we still have the ocean on the other side, and we still have the border on the other side, and all of a sudden, we have too many condos, right? And it's going to zero. If you turn on the news now, it's basically just like the worst doom and gloom stuff that you're gonna hear regarding the market. But as it relates to the actual realities, you know, you can't buy at the exact bottom and you probably won't sell at the exact top, but you can kind of tell when you are closer to the bottom than you are to the top, or closer to the top than you are to the bottom, due to some common sense factors, things you see in the media, as well as sales to active listings ratios that show you whether what an inventory level in a certain area is looking like, right? And when you're in a seller's market, every house that's selling will be selling more than the most recent comparable, and every seller that I talk to will say, most sellers anyways, will think their house is better than the neighbors, and they'll ask more and they'll usually get more, and so on and so forth, meaning the most recent comp will end up having a lower sale price often than the next one, and then onwards we go until eventually people say no. And then in a buyer's market, it's quite the opposite, with every single comparable sale going lower and lower. And as it relates to the factors that can tell you which kind of a market that we're in 2021, when we had an open house and there was a lineup out of the door and there's 20 offers on a listing and it's going double digit percentages above what the asking price is, it doesn't take a genius to figure out that that's pretty unsustainable, even though on the news and everywhere else you might be hearing otherwise. And when you're in a down market and you hear these, double digit, not triple digit, double digit losses, and you hear people talking about how, oh, it's never coming back and it's finished. That's not reality either. It seems that what gets clicks and what's kind of popular in any given moment and what's trending is an extreme one way or the other. So how do you mitigate against this if you're looking to buy or sell, right? The best thing is to understand the product that you're going to be looking for and having a longer term horizon if it can be helped, right? Because the shorter term of a horizon that you have, the more subject that you are to making irrational decisions. Now, regardless, if you're looking to purchase, yes, if you're in a buyer's market and there's more inventory and you can take your time and you can take more time to think and discuss and deliberate and look at comparables and do inspections and, feel different areas. So when you get into a place, you've got a better mental map in your head of what you're looking for. And then you will be more resilient to selling pressures. If it goes up or if it goes down, you won't really care because you're kind of like, hey, I got the place that I wanted. I'm pretty set where I am. Things get problematic when you have a short-term time frame, and you're looking to kind of get out. That gets very hard to predict. But life isn't perfect, and you also have other things to consider: job, family, stuff like that. So I guess maybe I'm talking in circles here, but the point I'm trying to make is when it comes to sellers markets, when it's the time to sell, you probably won't want to sell, and when it's the time to buy, you probably won't want to buy, or it won't seem like the optimal time to buy, or it won't seem like the optimal time to sell, right? When it's a buyer's market, people go, oh, I don't know what's going to happen in the future. So on and so forth, until things kind of might go the other way, and then people are anchored to a lower price they saw in a buyer's market, and then that might keep them out when things start to go the other direction. Because in the lower mainland, it's not very rarely do we get a balance. It's usually headed in one direction or the other. We're usually closer to a buyer's market than we are, or closer to a seller's market, and we're usually just shifting one way or the other, right? So you're either going to see comparable sales trending downwards, like more so what we're seeing on a macro level now, or sales trending upwards, which is what we saw a lot for the previous decade, give or take a few years here and there. And in those times, it's important to keep a sort of a stock market chart mental analysis in terms of seeing the choppy pullbacks that you would on a stock chart, and then kind of thinking that way when it comes to properties versus a linear approach where people will say, oh, it just goes up, but that's lazy thinking, right? You can have 10-year periods or 5-year periods where you look at the 90s or early 2000s where Vancouver real estate might have chopped plus or minus 2% for a long time, and then all of a sudden you get 1 year of like 25% gains, right? So I guess the moral of the story is to have a long-term time frame and an understanding of the product that you want to buy. And once you have that and you're deriving some level of utility in the form of living in the home, if you're looking to have a principal residence, as we get tax benefits for doing that in Canada, then you're pretty insulated. But if you're looking to speculate, things get dangerous, and that's been proven more so in the last little while. And if we're looking at the market as we are right now, those are the areas that are getting hit the hardest. The new inventory, real estate is pretty illiquid. You don't want to make it more liquid than it needs to be by purchasing inventory that's going to be hard to move in a environment where buyers have more choice, such as now. Meaning the inventory that was good, very livable, is still moving versus the stuff that's it's not as obviously peak as it was 2021, but it's not as down anywhere near as much as something that's cookie cutter dog crate was rushed and is more so the same. But again, I guess that's my little tangent on market psychology. If you want more specific information about a neighborhood that you might be interested in, you can contact me below.